Welcome to DeepTech315. Our first topic is the tax credits of EV. Look like they're going the way of the horse and carriage, at least for next year. And again, as a reminder that if you're buying an EV, typically you get like a $7,500 tax credit. It's not that black and white, depends on which EV you're looking at, the price, and so forth. But this has been, in some people's view, a big driver of demand for EVs. It's obviously been positive. It's been a tailwind. And since it's become more clear over the last couple of days that these credits are going to go away, we've seen Rivian shares. I mean, it's just incredible. Is down 25% in a couple of days on this development, and then Tesla shares just keep moving higher. It's down a little bit, 5% on the initial news, but then it's kind of bouncing back as of this recording, up a few percent. And so maybe let's just forget about the stock action for a second and look at the removal of this. And as Elon got closer to the Trump campaign during the summer, it seemed pretty clear that Elon wasn't going to get some sort of stay on those tax credits. My sense was that they were going to go away based on some of the commentary from Trump during that time. And so do you think, how does Elon, maybe let's start there, how does he think about this development?
I think over the long run, I think all of the automakers probably expected at some point there wouldn't be tax credits for these types of vehicles. Now, in the US at least, certainly they're going away probably sooner than Elon hoped and the broader industry would have hoped. But obviously, there's still a lot of demand in Europe. There's still a lot of demand in China. The US isn't the only market.
But let me interrupt there. We've looked back at the European ones and looked at the top 5 Tesla selling countries over the past year. Those tax credits are down by about 50%. Now they haven't gone away, but like in the UK, they went away. But I mean, Tesla's been hanging in there, growing these deliveries with some pretty big headwinds in terms of what's happened with some of these tax credits globally.
Right. And I wonder to what extent when they gave their guidance, which was fairly robust, right? Looking for pretty
Really
strong
robust,
double-digit
yeah.
year-over-year growth next year, what extent they were maybe already expecting, because even at that time, Elon was already betting that Trump was going to win. He had already hitched his horse there, and assuming that Trump was going to win, the credits probably would have gone away. And so maybe that's already factored into the guide. But I think optically, to your point, I mean, it doesn't look good for the industry. Just when we kind of thought we were out of the woods in terms of all the headwinds to EV demand, this certainly won't help. But maybe, again, like you said, what we've seen in Europe, maybe it's not as big of a headwind as it appears on the surface.
I mean, it's got to be, back to my question about Elon, I would think in a perfect world, he'd take the tax credit over no tax credit. But again, he gave that robust guidance that was 20 to 30% delivery growth. At the time, the street was at about 10%. As of this morning, the street's now at 14% delivery growth. So they haven't gone to Elon's guidance for calendar 25. And maybe that's part of just kind of tempering some of his expectations. But, my sense is that 20 to 30% is not realistic. I think the street numbers are probably more realistic for next year.
Yeah, and it's such a give and take with the Tesla story right now. There's so many different dynamics, I think, at play. There's the positive relationship that Elon has with the new president-elect. And then there's obviously some of these headwinds in terms of tax credits, and what might that mean? There's also that relationship. Could that in and of itself be a demand headwind as well? And so it's really hard, I think, to triangulate what is going to happen with Tesla over the next year. If you put it all together, I think you're probably right. Something that, maybe is tempered expectations relative to what they talked about would probably be a pretty decent outcome just objectively. And if they're able to actually deliver on the guidance that they gave, I think that would probably be a pretty big win.
Be huge. Well, I'll tell you what will be huge is the December quarter for Tesla. If anybody's on the fence, they're going to be moving and purchasing that vehicle by the end of the year. So I think that expectations are moving up for December. Don't think that people are going to give them too much benefit for a big December if that ends up taking from next year. But I think that's important. Another piece too is I believe that Musk is going to be rewarded for the relationship with Trump, his loyalty, his investment. And It might not be in the form of a tax credit, but it could be in the form specific to Tesla. I still think he's going to make it a little bit easier from a regulatory standpoint for them to pursue autonomy. For a different topic and a different day, our second topic is related to just more of this. We've seen a theme this year, several pieces from some of the big publishers that have been talking about this scaling laws are starting to break down, or talk that scaling laws are starting to break down. This is related to EV training. The best way to conceptualize this is back with Moore's law, when compute speed would double every 2 years. That just kept holding in place for many, many years. And in the AI world, we kind of have these scaling laws. And so there's some reports that inside of some of the big companies, OpenAI and Google, for example, they're just not seeing the return. And we're big believers in AI. And how important is it for these? Well, first, how important is it for the scaling laws to hold up? And second is what's our sense in terms of what's actually going on? What is all this noise about?
So, for any of these technological revolutions, like we're going through right now with AI, there are always there are pockets of time where there looks like there might be a stall in the adoption of the technology and the improvement of the technology. And this is really the first one that we've had since ChatGPT was introduced to the world, and really this kind of current AI paradigm started at the end of 2022. So it's been 2 years. Here's our first maybe slowdown. I think what it
But is
means
it
is
actually a slowdown, or is it just talk that the models are slowing down? Do we
the
know that?
potential. That's the thing that's not clear, because I think you can look and you can find comments, as in so many cases now, on both sides. We've seen comments from Ilya Sutskever, who obviously was prior at OpenAI. Now he's running his own AI model company, saying that we've exited the era of data. 2010 was the era of data, is what he said, and now we're into this area where we need to have more creativity and more experimentation. On the other side, Sam Altman tweeted yesterday that there is no wall, quote unquote, there is no wall,
I mean, that was
meaning
a
that
direct shot,
we
wasn't
haven't
it?
hit a wall. I don't know that that's a direct shot at Ilya, just to be clear what we're saying. I think that is a direct address to the rumors that
Fair.
we've hit
Yep.
a really painful point in terms of the scaling laws. So we've got information on both sides. What I think we can say objectively is this: we know that the law hasn't completely broken down. These models that we're talking about, the next iteration of GPT called Orion, the next iteration of Gemini, they did improve from their prior models based on the reports out there, but they didn't improve as much as the companies had expected. And so there's a couple ways you can think about the scaling laws. Like, number one is maybe our linear path just changed the trajectory a little bit. Maybe now we're on a new path where it doesn't
That's a
improve as much
negative.
as it did before. That Well, we don't. Number one, we don't know if that's what happened. Number
Right.
two, I don't know if that's as big of a negative as people think. I think people will perceive that initially as a negative, but the reality is, if we are still getting benefits from scaling and we're still getting closer to better intelligence, I think that the big companies are still going to continue to invest in these models and push it as far as they can. If the line went
Yeah.
like this, right? If it went flat, then you have a real objective problem. That's not what we're hearing.
It's the missing the forest for the trees here, looking at the scaling laws, when what really matters is getting intelligence at a point where it's a fraction of the cost at infinite scale. So that's what we should be focused on.
I think that's right. And when you think about these technological revolutions like we're talking about, not only are there fits and starts within the development of the technology itself, but this is something we've talked a lot about before. You go back to the dot-com era, 94 to 2000, there were 12 times where the NASDAQ pulled back 10% or more. We've
We've
only
had one
had
of those
one of
so
those
far.
times. We've only had one, right, in 2 years. And so there will be more before
Right.
this whole AI boom ends. Maybe this is the catalyst for one of them. It's hard to say if it really matters or not, but it's certainly something that people are paying attention to.
Well, we're still in the camp that we've got several years forward of what's going to be great market returns based on AI. And this whole conversation about the scaling plays into the A event for next week, which is Wednesday, and Nvidia earnings. If you look at where they had guided the street, it was basically like 32.5 billion in revenue for the October quarter. The street is inched a little bit above that at 33.5, call it, which is basically up 85% year over year. The whisper numbers undoubtedly are higher, probably at 35 billion. I don't know what that is on a year over year basis, but that things just continue to be moving along well there. Before we talk about going forward, I don't know if you're in on these conversations, Doug, but I'll pop quiz here. In the last quarter before Nvidia saw the step up in growth from generative AI, that would be their January 23 quarter. What did their overall revenue do? How much was it up or down?
I'm cheating because I did hear the answer at some point. It was down like 21% or something like
down
that.
21, yeah. I mean,
Yeah.
doesn't that tell us that eventually this is a boom and bust business?
Well, if you didn't already know that, then you haven't been paying attention to semiconductors. Would be my
Right.
answer to that. Yeah,
Yeah, I mean,
absolutely. That's the history of semis. I think the question though with Nvidia and AI in general is, are we in such an acute demand phase that could last for so long that the cycle is extended well beyond what we've seen in the past? That's really what you have to believe in,
right.
I think, to be bullish semis.
And so that, just to put some perspective on it and pull up the numbers, is that for calendar 24, NVIDIA is going to grow about 110%. Calendar 25, the street has it at 48%, and calendar 26, 21%. And so what matters is for next week, it's what is Blackwell? How does, the results don't really matter. It's about the guidance and how far they supply constraint on Blackwell. Is that the pressure point?
That's probably part of it. I mean, I'd offer two thoughts. One is obviously 3 weeks ago when we heard from the other hyperscalers, it seemed like the demand there was healthy. Microsoft talked about continued mismatch between supply and demand. They don't have enough supply. They've got a lot of demand. Meta's talked about continued aggressive spending. We know Google's in the same camp. And so obviously there's still strong demand there. Demand hasn't fallen off a cliff. That's probably safe to say. I think the other thing, though, around Blackwell is it's not just the supply that I think could be a question, but also what is the lineup and how quickly do they get out? Their higher end GB200 rack, right? Where that's kind of like the full, saying the full product that a lot of these hyperscalers do like to buy. If that is later than expected, then maybe you do see some fluctuation.
What's the
in
current
terms of how you think
expectation on
about.
timing?
I believe that the current expectation is like mid or late next year. I'm not 100% sure
Okay.
about that, but I think
But even
it's
if they
along those
push it
lines.
out, people know it's coming, right? I mean, that's what happened with Black. They actually did push out Blackwell last quarter by a quarter, and people seem to be fine with it.
I'll say the old adage, there's always someone who doesn't know. And I think with a stock like Nvidia, where it has been working actually too the last few months, I think it's one of, if not the best performing, maybe Tesla's a little better, but one of the best performing mega caps. And so I think it is also set up in a way where if you do have a blip, there's going to be some people who are just hot sellers, and you just have to be ready to kind of weather that.
We'll be paying close attention to those results and report back next week. On behalf of Doug and I and DeepTech315, bye for now.